do think the system is very unfair. The world banking system or the world financial system exists to enrich certain individuals, that top 1%.
Welcome to the Global Affair podcast, brought to you by Love Out Loud, the world's largest love-based movement, actualizing a civilization of love by 2030. My name is Nicole Gibson, and join me and some of the world's brightest minds as we bring some of the most important and controversial conversations of our time into a space of unity. It's important to know that as your host, this isn't about my personal opinion or bias, but rather an opportunity to listen with love, honesty, curiosity, and reveal the true universal experience us humans have amongst the differences. So if you love the show, please let us know by giving us a rating and tell us how to make this conversation easier for other people to jump into as well. And with that, let's get it. Elena, welcome to the Global Affair, ex-Wall Street finance group, now champion for startup founders and what would you say, different minority groups, empowering them to build financial literacy in a time where, I think many of us need it. And many of us don't have access to the information that we need to flourish during these times. So I'd love you to give a bit of an overview around your mission in your words, and then I have some questions that I'd love us to get right into, because I know this is going to be a good one for all of our listeners.
Yeah, thank you so much for having me here. Super excited. Ex-Wall Street, have been on 3 different firms all the way across business banking to private banking to wealth management and private wealth. A great subject to be working in and a great topic to be learning at all the times. But what really prompted me to start my own thing was that recognition that, the world banking system or the world financial system exists to enrich certain individuals, that top 1%. And I think that was very disappointing to me personally, to understand that we work so hard, everybody there. Obviously, a lot of people work there to enrich themselves as well, along the process of making others rich. But it was so disappointing that see people extremely talented being completely corrupted or just disintegrated with their reality in terms of working for that top 1% and putting all of the most sophisticated and unique features of the world of finances, but completely disregarding the rest of the world. And I've been on the both spectrum of financial system, working in the financial services, working with individuals that are from marginalized communities, working with the affluent communities, and then later on with the top 1%, to see that from the business standpoint, as much as the companies care about the bottom line, unfortunately, the bottom line is only going to get better when you serve that top 1%. So what to speak about the regular people, everyday people. And actually, I think I moved to the United States. This is my 4th country, and recognizing how complicated the system is, and there is no one and only resource where you can go. Like I work with individuals in Europe as well, and companies and families, and everybody's asking me, it's so very difficult to perceive the world of Wall Street. Is there any resource that we can sign up for? Like any course? In our country, there is this one institution or this one government-approved entity that gives out classes to understand how to navigate the world of money. Is there anything like that in the United States? Which made me laugh completely, because unfortunately, no. So that was one of the sad realities for me, to understand how difficult and complex the system is, and how difficult it is to get through for regular individuals, especially underprivileged communities, underbanked communities, or just simply everyday people that never got the privilege of having financial education, not having the privilege of their families, and explaining how the world of money works, or just in general not being lucky enough to have the resources in place. And for me, that was a very eye-opening moment to realize that this is an untapped potential, not from a business standpoint, but from the point of contributing value to the communities. Because I do think that rising tides lift all the boats. If you yourself know how to operate and manage your money, and you share that wisdom with others, we as community all thrive. So that's what made me start my company. I do work with individuals and companies, primarily of so-called minority features, immigrants, first gen, women, queer people, all sorts of people from all sorts of backgrounds that just either new to the country or now come to the realization, I want to better my life, and not only for my sake, for the sake of my family, for the sake of my community, the people that work for me or with me. And so we just kind of started with that. And now I'm on the mission. I'm on the mission to spread the financial literacy as much as I can, because I do think that as a society, we will only benefit when we're all financially educated and can make informed decisions for ourselves.
And just a little plug, Eleanor and I actually just released a course that I think is a brilliant kind of overview on the psychology of money, how we've learned to relate to money, the impact emotion has on money. We go deep into that on the hub. So please jump over there and check it out. If anything in this conversation is resonating, or you know that your relationship with money could improve, you don't feel on top of your relationship with money, it feels like it's constantly something that is controlling you rather than you controlling it, I know you're going to get a huge amount of value out of that. So just a shameless plug there. But Eleanor, and one thing that you're kind of touching on, I know is something that I find myself thinking about a lot and have thought a lot about over the years, and I'm sure many others, especially the listeners of The Global Affair. Your experience working in Wall Street and actually seeing in real time the way that our economic systems are actually geared to only serve that 1%. Can you just give a bit of a kind of the 101 overview around what you noticed and how you actually came to that realization?
Excellent question. I love it so much. I just think the system is very unfair. I do think particular in the United States, but actually anywhere across the world, it is unfair for several of reasons. Take your everyday person. If they don't have the privilege of the family that has the resources to tap into professionals and all sorts of companies that work for them to explain, this is how you handle your money. And that starts with something small when you're young, to then being in high school, going into college, understanding here, for example, when I moved to the United States and I went to school in Germany, for me, I could not believe, I literally had to Google it, that in order to get education here, you need to take on ridiculous amount of loans, especially for something that is grad school, medical school, law, anything related onto any education, especially of that higher tier. You have to take on immense loans to that. And then also the concept of consumerism was very foreign to me, coming from Europe, where you kind of have to be reasonable, right? The amount of credit card debt that is happening here. And I don't think that credit per se, as we have it here in the United States, is as vivid as anywhere else, because just simply you're here incentivized in order to consume as much as you can. But now it's taken on the global tap completely in the world. So when I first started, it all started with my personal experience of like, okay, I'm new to the country. How do I advance myself here? Oh, you need a credit score. Okay, how do I get the credit score? Oh, you need a credit card. Okay, how do I get a credit card? Well, you actually need a credit score. So it's a chicken and egg type of a situation. But if you take a look at it more of a global and kind of like expansive view, it is a problem everywhere. You as an individual, when you're not quite aware of what to pay attention to, that can take you to wrong decisions at a very young age, to where I worked with so many individuals, brilliant people that were completely unaware of what's going on, or were so deeply in debt, or just mismanaged their money at a very young age when they were students in college or early 20s, late teens, where they didn't really know how to handle that later, and were so burned out and completely afraid of not exactly knowing what they did wrong, or maybe knowing what they did wrong in the past, but not knowing how to move forward through it. And so there was this big gap in terms of people not simply knowing what to do in order to live their best life. And the way you can live your best life, obviously, there's a bunch of other things like health, mental health, happiness, but financial part is an integral component of your happiness, because if you don't have money, it's like the Maslow pyramid. If your basic needs are not met, and that means providing shelter, food, cover, and all of that, which you buy with money. So it's kind of that, it's becoming a vicious cycle of a lot of people living paycheck to paycheck across the world. Obviously, there are nations that are more advanced than the others, and a lot of people live in complete poverty all the way around the world. And to me, it's very painful to see here in the Bay Area, San Francisco, California, which is the tech hub of the world, where all of the innovations and all of the money is basically coming from in terms of the development of tech, to see so many people that work really amazing jobs getting six-figure salaries, yet living paycheck to paycheck. And first, I thought it was kind of like that evil joke, like, funny, but not funny. But now, working with a lot of individuals and companies, I see how much of a problem that is. And the problem is, obviously, the more money, as they say in the song, the more problem. But the fundamental issue is the way your mentality works. It's not only that tangible knowledge of, okay, understanding the how to move money around or how to save and all of that, but I think often an integral part is the mental capacity to not only understand, but to deal with your limitations, with your blockages, with whatever you were taught or developed by yourself, thought processes that you developed in yourself, to overcome them, and then educate yourself to level up in your life financially, first of all.
So many great points there that I can't wait to jump deep into, including some of your story, which you've touched on. So I think it's a really interesting perspective to grow up in Russia, then to move to Germany, sort of experience communism and then European culture, and now into the United States. I'm curious to kind of hear how your mindset has shifted as a result of seeing and being a part of different kind of economic structures as well. But before we go into that, the past few years, I think definitely living in San Francisco has highlighted this to me in an even greater way. I think it's less visible in my country where I've come from, which is Australia, than it is, say, in San Francisco. This kind of erosion of the middle class, where you're seeing a huge amount of homelessness, which of course, the opioid crisis has a lot to do with, what the world has been through the past few years, with a massive amount of jobs lost over the pandemic, especially in a city like San Francisco, which now has, I think, a 30 or 40% occupancy in the city for organizations and all of the people that were employed by those buildings and companies. So many of them have been impacted. And yet, we know that the top 1% generally got wealthier between 2020. Break that down for, the average Joe working at a coffee shop in. How can he really understand why and how, and the dynamics of what that all means and where to from here?
Yeah, that is a tough reality. I think that's a tough pill to swallow, to understand that certain countries are more established in terms of having the middle class than the others. The United States is the wealthiest country statistically. However, when you look under the hood, unfortunately, I think it is the poorest country, actually, because your average person, it's like, not to throw LA under the bus, and I'm sorry for everybody who's watching that are LA related, but you know how in California there is a big comparison between San Francisco and LA, where San Francisco, a homeless looking person that is just completely wearing something aesthetically not pleasing could be an actual billionaire, where in LA everybody's wearing all the brands and labels and looking good and have all the designer clothes on them, but actually are broke. Not everybody, but there is a big variety of those individuals. So I think kind of like that LA image represents the United States. A lot of people are completely in debt with mortgages, the car loans, everything is on loan, everything is on the credit card, where visually you would see somebody's living a good life, they're driving a good car, they're having a nice house, they're wearing good clothes, but how is it all acquired? And I think because there's such a big push on the consumerism and also on you have to strive and you have to do so much, and that a lot of people kind of like keeping up with Joneses, you know, where they're trying to keep up with those appearances. And unfortunately, there is a huge discrepancy in the way that how the actual people live. So as you said, there is kind of not middle class, and it depends state to state. You know, people watching from outside of the United States probably will be like, this is crazy, you know, like myself coming from Europe, you know, a middle class is a big chunk of your population. You would see obviously people on each side of the top and the bottom, which represents the minority of the percentage, where the majority would represent the middle class. And obviously there is lower, middle, and upper class of the middle class. But still, you would kind of assume that your majority of people in your network are within that community. Obviously, exceptions exist. But here I feel like, especially in the Bay Area, we live in such a bubble and it's such a skewed reality where there is no middle class. There is literally just the top, and you kind of try to make it from the bottom. And unfortunately, also there is a very diverse variety of people living here from all sorts of backgrounds. There is a huge percentage of undocumented population, which, you know, with like, for example, in the United States, for you to get a job, you need to have a social security number. If you are an immigrant first coming to the country, maybe undocumented, that presents a big problem. You know, you don't have all those just simply legal things established under your name. That presents a much bigger problem. So then naturally you take a different job. And also the cost of living here in the United States is extreme. For example, if somebody is making, let's say 45,000 euro yearly in Europe, depends on, of course, where you live, you know, let's say in Central Europe, that is, or like say $50,000, that is an amount that can sustain you. You know, that is an amount that can provide you a good apartment, good quality health care, good quality food, and everything else that you might need. You might not, you know, fly first class or, you know, experience those type of things, but you will have a good life. 50,000, let's say we convert 50,000 euro into, let's say roughly $55,000 in here, you can't sustain yourself. Yeah, like where you can be on
is like 100 grand or something, isn't it? In San Francisco, like if you're earning less than 100 grand, you're living.
You're literally poor. Yeah, you're living below the poverty line, which is insane to think. Like the other day I went for coffee and lunch with a friend. I paid like 30 something dollars for that. If you would convert it into euro, let's say 26, 27 euro. For 26 and 27 euro, you can have a really nice meal, like a really nice meal with wine, whatever it is that comes on top of it at a really nice place. Here, it's basically like an average cafe type of thing. So the price of living, the economical conditions of it all just creates a totally different reality. And so on top of that, you add all of that consumerism, and you need to have this and that in order to be a good individual or a good citizen. That all adds up this whole problem. And also, not to go into any conspiracy theories, but in the product of credit in the United States was created to boost the economy when people were coming back from World War II. You know, okay, how do we boost the economy? We don't have enough to sustain everybody. So then that credit system was established to where you can buy a new refrigerator on the credit, you can buy a new car, you can get a mortgage, all of that. The first credit cards was introduced shortly after. But if you think psychologically, if a person never really heard about such a thing, why would they take credit, you know? So then this whole commercial side of it came across with the ads and the television and the magazines and the radio advertisements and all of that. So it then created this whole bubble of the economic sector that just one sector supported the other. To, you know, for you to sell the fridge, you needed the ad. And then for you to buy the fringe, you needed the credit. So it all kind of came together that I think just bubbled it all up to where we saw a bunch of different recessions across the line in the past years. But I feel like nowadays I'm sorry, I'm ranting for too long, but I feel like nowadays in an excellent opportunity of the environment where internet is our best friend. Social media can be our best friend if we filter through information correctly. For example, 10 years for somebody accessing resources for educating themselves in terms of financial, like, what do I do? Granted, all the products change oftentimes, but generally speaking, understanding, okay, I get the paycheck, say twice a month. How do I handle what chunks of money goes where, and how do I manage all of that? 10 years ago, it probably was a little bit more difficult to obtain all that information, where now you can literally go on TikTok, you can go on Instagram, you can Google stuff, you can watch things on YouTube. Granted, there is a lot of misinformation, but generally speaking, now with the tap of your finger on your phone, you can access so much more information. And to me, that is an exciting way of thinking about it, just how we were just recently talking about the shift of that paradigm. This is one of the things. And the more I talk, whether it's a public speaking or just one-on-one conversations, a lot of people coming to me saying that they are hungry for this knowledge. They've been trying to learn it, and they have a lot of bits and pieces, you know, here and there. And I come in to structure that all. I think on the individual level, that is extremely important. But that is even more important if you are somebody who is self-employed, founder, entrepreneur, you hire people that work for you, or you have clients that depend on you, where now it's not just you and your personal finance, you're managing your business finance, especially as you expand and your business grows. The more money you deal with, the more complex systems come in place and more people report to you, then it's extremely important for you to be not only a good leader and an empathetic leader, but understand how the money works, so you can not only sustain yourself, but your mission, your company, and everybody that works with you.
I mean, I echo that so much. That's been the biggest learning curve. I remember the first time I ever had to sit down to write projections for the company, and just the feeling of overwhelm, versus now using that as my kind of sober source of truth in the company. And I guess the reason I share that is, if anyone's listening who's maybe at the beginning of their journey and confronted with learning this thing that feels really overwhelming, just know that it will eventually become one of the most empowering things you can learn, that actually is the source of truth that allows you to whether it's just scale the wealth and affluence in your own life, or build a successful company. Investing in this, the thing that we really should have learned from the very beginning, but many of us haven't, as you've alluded to, just yields kind of an unprecedented amount of value in our lives. You just spoke through so many interesting factors, and I want to go back to what you touched on around the credit system that was that was distributed into American society post World War II, and just genuinely curious to understand the ways in which you feel that has been fundamental in changing our relationship with money on a societal level. Like, what were the biggest shifts that started to happen, maybe psychologically, pre that credit system versus post that credit system? Yeah.
I mean, economically for the society, it probably was good for some amount of time. The system was created to boost the economy, to make more jobs available, to just completely revamp the society. But unfortunately, it then created this habit, and I think it's the mentality of nowadays society where we don't treat money as seriously as they are. And I know they say, money is just energy, but if you think about it, it's more than just that. If you physically cannot afford a $60,000 car, right? In terms of planning it into how much it will cost you actually when you add all the interest rates for 5 to 6 years, or even if you lease it for 3 years, whatever it might be, add the cost of that. Uh, your actual monthly payment, can you sustain it? And is it worth it? That is a big question, where now people tend to buy all those things, especially nowadays. From the fintech perspective, buy now, pay later systems is a very interesting phenomenon. But unfortunately, we've seen, especially around COVID time when it got so popular, where people just went crazy buying stuff online, we saw that the statistics were different, that a lot of people went so much crazier on that reel of buying things, where then later were simply not able to pay it back. And so that creates this element where you're not taking it seriously. Okay, like for example, this iPhone, right? It might cost $1,000, but if I were not to buy it with my actual money, if I were just to put it on the credit card and then forgot, and here I am another 2 years later, still kind of paying the minimum of my credit card, the annual percent rate, that is charged on your credit card is crazy. So I think that's what a lot of people are missing completely, is understanding the actual value of your money and the actual purchasing power of whatever you have. So, and the way, and maybe that sounds a little bit more grandiose, but I truly think that's the core problem of the society, is that the system is created to where it is not beneficial for people being financially literate. It is beneficial for people being financially inept. It is beneficial for people not completely understanding how the hell it all works, how to take a loan, how to manage your money. Do you need to save? So many people are on the poverty line from simply, unfortunately, not making good financial decisions. And I think that is a big problem if we were to teach our children in schools, if we were to teach younger adults in the university level, on the early stages of their life. How do you invest in yourself? How do you manage your cash flow? How do you save for later, retire at some point? How do you not go into debt? Or if you have to go in debt, understanding that there is good debt and bad debt. How do you leverage the financial system to your advantage without being an asshole? So sorry to say that word, So I think it is a very challenging system, but I do see the big changes. I do think that it starts with both sides of the reality. People like myself who are in the field or who just come from outside and trying to educate others on the financial literacy. And then also the need from the individuals themselves. I feel like at some point we've just got into this level of so tangled up in the debt in itself, or just bigger problems where there has been a genuine need. So now I'm seeing in the Bay area at least, and the United States in general, especially lately, especially during or after pandemic, there has been so many grants, institutions, individuals, programs, foundations, businesses that volunteer their time and money to promote financial literacy, to organize classes on financial literacy. And literally, you don't really need to have exceptional, sophisticated concepts in place. You just need to understand the absolute basics and build from there.
What about the US dollar? Do you think the US dollar will continue to be kind of at the core of our economic stability, like in decades to come?
That is an interesting question in terms of it is very heavily tied to politics. And it's a tough one to answer because politically speaking, the United States has a lot of control over the world and how just everything works. Um, in terms of accessibility, I do believe now a lot of countries are trying to create newer systems to trade within themselves. It is a tough one because
Just on that, right? Like I think it was, north of $2.5 trillion that China and Russia have traded inside a closed economy between the two countries just in the past 12 months. And that's
yeah,
all of the sanctions right now that are on Russia. I mean, in many ways, is that pointing to the fact that the West might not actually be as globally dominant as maybe people in the West still believe we are.
Um, I think that is more of an exception of the rule to just simply because Russia is under sanctions today, and it is a very heavy situation, and Russia possesses a lot of resources and a lot of power. And in that case, not everybody is willing enough to say, we don't need it. Even the Europe itself still relies on the gas to heat their houses during the winter. Um, I think
I think that was not just with that trade with China. So what sort of in understanding that, what it sort of woke me on to was, well, actually, there's not as much of a global dependence as maybe we once believed as the West. And actually, these countries do have a way of actually sustaining a closed economy in and of themselves, whereas, arguably, America cannot do that. If you're living in America or you are an American, you have a total dependence on import export in order to just kind of live the quality and standard of life that you live in.
I would say if we were to take politics aside, which is a big component of the world economy, but think about it as currency, if you were to take that instance and compare it to an actual business, right? If one corporation dominates the entire market, that's called monopoly. And so we do have organizations that do control anytime that any company is trying to buy each other out, there is an institution comes to examine that, right? So it's not antitrust, and all of that. There is a big concept of that because if it's monopolized, right? That's how you pronounce it? If there is just one business operating and controlling the entire market or the entire world, that's a no-no, right, in the business world. So I would say the same is only fair to think about currency. Obviously, there is, like in the European Union, there is euro, so every trade going in and out is probably in euro. But I do think nowadays with the decentralized technologies and back in the day before the crypto winter, before all the shit hit the fan, there was a big hope for crypto. I do think it will take a massive amount of time for developing an alternative way. One of the trickiest part here is to have the system in place that is not controlling and limiting its systems and citizens. For example, as we see in China with the digital yuan and other places as well. So I do think it will be interesting to see how the future unfolds. I would imagine that there is going to be more interested parties involved to have that decentralized approach. I think the matter is in regulations and actual implementation. It's not that easy to, especially the dollar historically has been the leading currency since the World War II. So that has been the majority of the 20th and the 21st century. So creating something of that radical nature would require a lot of partnerships, collaborations, and different sort of organizations coming together to determine how it is, and we all know how it goes. So I would give it another, 5 to 10 years to see how it all unfolds.
Yeah, fascinating. And I mean, there's other disruptors that we're not even really going to get a chance to consider in this conversation, like, mass job loss over the coming years, how that's going to be dealt with economically, maybe
I actually have a conspiracy theory on that.
All so-called conspiracy theories are welcome for at least open discourse on the global affair.
The way I see it is, it's actually ironic and funny, but it is actually not funny and very true. Is if you think about the markets, the way the markets work is if you have, say, company A is doing a great job and is bringing more profit year after year, the analysts examine that company. They say, oh my God, this is working great. The leadership is amazing. Every quarter it reports with higher numbers and it kind of beats the expectations. So the market is going up. And so for the company A, it is a great thing, but it is a trap in the same way because it presents a lot of pressure on the company to bring in more and more profit. So on one side, that's how capitalism works and how innovation works in terms of you try to discover new ways on how to bring more profit and more innovative products and markets and expand and all of that. But there is only that much you can grow. And so whenever it comes the moment where you're literally flat, that's a negative thing. If you only went up 5%, but the analysts were kind of expecting 10% because historically in the last 2-3 years, you've always delivered that extra 10%, that is a bad thing. So then there's so much involved into the stock price related to that, right? But then it's controlled by the shareholders and you don't want to upset your shareholders. And by shareholders, I'm not saying that you own 10 stocks of company A, I own 10 stocks of company A. We're talking about institutional investors, big, huge companies that control 50%, 20%, whatever it is, right? So there's a lot of pressure. It's kind of that chicken and egg thing. So then it's a lot of pressure on the company. How do you deal with that? And a lot of companies, what do? You need to improve your bottom line to be sustainable in the eyes of a shareholder. How do you do that? The first thing that comes to mind, laying off people, right? But if you think about it, it's kind of hysterical to think about the 2020 when the pandemic hit and there was a lot of stimulus in the economy worldwide, US specifically, here Bay Area, where the majority of the tech companies that are part of a lot of world indexes on the market, financial market. So then you have a lot of that stimulus and the economy is great and the rates are low. That means the stocks are high. So there is a lot of micro and macroeconomic influences, but because the money is so cheap, it's easy to evaluate the companies to the incredible highs, to get all that free money at like, I don't know, 2%, whatever. And so you kind of like, as a company A, you are saying, oh, we gonna hire 1,000 people at a company of like, say, 10,000 people. The markets say, oh my God, this is incredible. The company has so much money, so much potential, so much growth strategy, aggressive growth strategy, that they're going to increase their headcount by 10%. Then the company hires all of those, or at least once you announce it on the news, your stock goes up, right? So, but the natural cycle, like, you can't go indefinitely up. At some point, you have to have a correction. Yeah. So then we see all of this. Oh my God, the economy, 2022 came in, the massive layoff, 2023 came in, the massive layoff. But then, continuing this analogy, the company A and say hired a bunch of people in 2021, then they're declaring that, okay, we're going to lay off 2% headcount of the entire company, right? They lay off a bunch of people, then the markets say, oh my God, this is amazing for that stock. And typically, if you notice when it's happening, it's right on time to make your books look pretty, to then report your quarterly or annual reports and then have a really nice picture. So then again, the market says, oh my God, this is amazing. This is great. The stock goes up. So it's that rally going up and down. it's tied directly to the market, and it's as a company, you kind of have to participate in that in the market, and a lot of people win, but a lot of people lose along the way.
Yeah, I mean, I definitely see what's happening now in the past couple of years as a market correction. But then I also see, I don't think it'll be as much of a problem because there's a greater risk appetite, say somewhere like Silicon Valley, but smaller countries that are trying to drive innovation, because there's been such little investment in the pre-seed, seed level companies, there's now not going to be the next generation of Series A, Series B companies. And so a lot of these countries have actually been like their innovation's been seriously stunted as a as an effect of this correction, downturn, whatever you want to call it. I mean, I think that that's definitely true in Australia in many ways, but you know, it's interesting. I think this year is going to be really interesting. They're also calling 2024 the official year of AI, so I think we're going to see potential of you know, systems and business being done really differently. As of I get excited about this, you know, I see mostly opportunity in it, and I think we need to kind of adopt that mindset to be agile, to be flexible, and kind of work with the changes that are happening rather than fighting against them, kind of an adapt or die mindset. But yeah, I think all of these things that we're talking about together, the aggregation of all of it together, I do think we're kind of uncharted waters in many ways economically. I think even the best analysts are potentially not able to predict what's going to come next.
Two parts I wanted to mention. One of them was I think as markets or investors, not talking about stock markets, more talking about venture capital landscape, is there is so much hype going on. You know, what it was 2022, it was biotech. Everybody was investing like crazy in biotech. 2021, everybody was investing in crypto. It was crazy. Money was just literally falling on your lap from nowhere. Blockchain, Web3, right? 2022, some parts of fintech, a lot of other instruments. 2023, we saw an immense amount of money just given away to AI companies. And even the VCs in itself are laughing about it, how ridiculous it is. You can't, obviously, there are trends that you have to recognize to enable to drive the innovation. You have to invest in those trends. But to me, it is comical how I think what you mentioned is making so much sense, where you have to really see the bigger picture, you know, the long term. What are you trying to achieve, and not just jump on that hype, you know, like the same company or the same founders that in 2021 were gambling their life away on Web3 and crypto are now in the AI. I mean, you have to adjust, of course, but I think a lot of people are jumping into this bandwagon of free money to like, oh, we'll see what the hype is and we'll just develop. It's great that you're so smart that you can identify that and bring the product to the market. But I think the fundamental problem is actually just you need to create products and services that make something better, something good for the world, that create communities, that bring people together, that elevate other people's lives and make it better, not just to make a lot of money, cash out, and run away with that, you know?
Oh, look, I personally couldn't agree more. I think that a founder's job is to really go deep into the problem they're trying to solve, you know, and really figure out how to do that in innovative ways, in more cost-effective ways, in more accessible ways to drive value, you know, in what they're developing and creating in their company. And this constant kind of, I think it's just another version of the manifestation of short attention spans, like where you know, old rap now that can't stay on one track because of I don't know, overstimulation and dopamine addiction more than anything.
More than anything. Yeah. And also a part of the difficulty for individuals who are starting something from scratch is extremely difficult. As a founder, you have to have, is what you teach. You have to have this emotional resilience. You have to level yourself to this incredible place where you're steady. You're focused on what you're doing and you're steady. And apart from that, also, nobody wants to gamble that much on something that they don't really know how it's going to unfold, unless there is a more easy economic situation where there is more free cash floating around. But in this scenario, like today, we have in the beginning of 2024, it is hard to obtain funding. So a lot of people, a lot of VCs, firms, angels, whatever, are more likely to invest in ABC level because there are already companies that got to that point where they have the track record and you can kind of see how they're rolling. Where if you're just starting, no matter how great your idea, you're facing with more difficulties to obtain funding in the original space because you're new, your idea is new. And so that presents a lot more challenges for founders. But I do think that nowadays we are in this landscape where a lot more people identifying that the world of innovation VCs is not fair. It's a boys' club, and there is not much funding going to diverse founders, to queer founders, to people of color, to women founders, and all of the other communities that create a nice product or a service, simply just because they're not buddies with somebody who can have the access to the checkbook to write a check. I think that is now slowly changing, where more people, especially in this area, where in the Bay Area, where and I say relatively easy in the way that if you get a tech job, you get a nice compensation. If you're smart with your money, you save your money, then later you think, okay, I want to be an angel investor. And I think nowadays we're having more and more people that are millennials that are coming, that have a different mindset and are coming to significant amounts of money where they do want to do something, not only to plan for their own retirement and their future, but they have that chunk of the money that they want to do something with it to make the world a better place. So oftentimes they're seeking founders of diverse backgrounds or diverse by backgrounds, I mean not only just, like gender or other things, but also different experiences in life. They don't have to be necessarily those genius engineers day in and day out. I feel like it's beautiful when you have a totally different story behind you, so you can look at the same problem but from a different angle. And I do believe that nowadays we have more people coming together that are forming either groups or individually and investing in companies that are of that non-traditional background.
Yeah, totally. And I had a conversation with a CEO of a fund recently whose perspective was to really eliminate the founder from the process of making investment decisions, i.e. like the first point of analysis being a business analyst looking at the business as its own kind of thing, and then having that be the crux of the decision making. And I believe the sentiment there was to make it less infused with bias, right? But a part of me, although I understand that, a part of me also believes, and I guess I'm taking it from a founder's perspective, that the human should and needs to be a massive part of that process. Like what is their representation for the world? What is their character? What kind of leadership are we supporting and driving? And I think to eliminate that is really missing the point in a lot of ways.
I would say yes and no. It depends on what capacity. For example, you've mentioned about analysts just prior to that, and it came to my mind. Back in December, I was at this event here in San Francisco. It was a great setting of different companies, AI companies, presenting solutions for the future of fintech. And this brilliant company, gosh, I have chills when even thinking about it. It was, to me, as somebody who worked on the Wall Street, was hilarious. And they were presenting an algorithm, AI-driven algorithm, that is not only relevant for finances, but anywhere in the world, where it's basically, they were showing the data of if you were to take a an analyst's prediction of, say, any company, stock, equity, whatever it might be, what they're saying, how it's going to unfold in the next month, quarter, year, whatever, right? I've seen so many analysts, and I've worked in a lot of brokerages and trading desks where you actually see that somebody releases this paper by XYZ company because it's going to be great. Everybody's buying it. 2 weeks later, they announce whatever their CEO is full of shit, or they can't deliver the product, whatever happened. Then you go bust. Like it happened with Olaplex back in, I think it was 2021 or 2022. I can't really remember the year. Basically, it was the hot stock that everybody was investing in. It's a company that does shampoo or whatever, the hairstyling thing. And then later, sometime later, European Union released a report of one of the ingredients being so harmful that it's either a carcinogenic or something of very severe nature related to your health. The stock went to shit. Now you can still buy the product, but the stock went to shit, And so to me, it is hilarious. So I'm sitting there at this event where they're showing this technology and their data is brilliant. They're showing that they're able to train the model that can predict how specific equity or the market is going to unfold in the next short term, long term, much better than a trained, educated, experienced analyst at whatever firm on the Wall Street. And to me, that's where I see both a challenge and a great opportunity. I do think it is extremely challenging to train the model to be unbiased, because I do think that a lot of companies, a lot of firms that do come up with that analytics could be biased because they are moving market. They trade volumes that even buying, that even saying, buy this thing will just completely move the market totally, right? So then creating the algorithm or the system in place that is unbiased could be a much better way economically in terms of you don't manipulate the market. That is a very sensitive subject that I'm getting into. But I was just sitting there, and to me, it was hilarious to see how they say, and they're pure about it, we're able to figure out how to train a model to be less biased and more accurate than a excellent analyst at XYZ firm on the Wall Street.
Yeah, again, interesting times, right? Like these innovations, if they are adopted, whether it's, a company like this or some alternative way of making decisions, I think the fundamental ways in which we're making decisions as companies, the way funds are making decisions, all of this right now is in question. And so, that's largely unpredictable for the time being. But interesting.
One of the things that I wanted to mention, especially in the times like this where the money is not free falling on your lap, I think really having a sense of control and understanding of how do you manage your money as a company, regardless of the size of your company. Obviously, it's easier to manage your money when you have a lot of money, but even if you're a very young startup, right? Maybe not. a small company, whatever size it is, in the environment when it is more difficult to obtain funding and more difficult to obtain loans or whatever other money externally coming in, it is extremely crucial to manage your cash flow, to understanding your runway, to understand your fume date, to know exactly when it is time for you to raise the money, so then you don't run out of money and you're only, say, hypothetically 2 months short before you could have obtained that funding, And I think that is a lot have happened since we recorded that course in my personal work with a lot of founders, and it only reinforced my thinking of what we discussed during the course, how extremely important it is. And I worked it's been a few months now, and I worked with a lot of founders and I talked with a lot of founders that just on every spectrum, regardless of how big their company is, regardless of how much funding they obtained, it is extremely crucial of knowing how to make your financial model, knowing how to understand your numbers, knowing how to create an accounting system, knowing how to manage your expenses. Knowing the numbers, I think a lot of founders are so passionate about product, which is still great. It's your mission, right? You're delivering that and potentially bringing it to the market. But in order for you to bring it to the market so the people can actually enjoy it, you have to know how is what Nicole, what you were saying in the very beginning is that sobering moment of you understanding how much money you need to have and how you operate that spreadsheet for you to actually bring your product to the market.
Yeah, amen to that. Always the most enlightening conversation. My plug at the end is going to be go and check out our course. It is filled with assessment, so you can actually do the personality quiz and actually see what personality you have when it relates to money. We didn't get to touch on it in this interview, but it's all there for you. But I didn't want to end without this one question, because it really is a curiosity of mine personally. What is the number one observation that you've formulated as a result of having lived in such varied economies over the course of your life? And how is that the way that you think about money and manage money in your own life as other people to do the same?
I think having the agency is extremely important. Being independent in your decision making is extremely important, and taking control of your financial situation is crucial. How do you do that? Is by that's wanted to relate that back to the course. We were talking about personality types. It's really understanding what is currently going on with you. What are you lacking? What are you trying to achieve? And how are you personally handling money? Is there any fear going on around it? Are you just irrationally buying everything on the whim because something else is going on with you? Do you need to take money some more seriously? We're laughing, but behavioral finance is a thing.
Yeah.
Right. And
so I think to that example, like, oh, why did I go and blow all that money on the weekend? It's probably a deeper seated issue I'm not looking at.
100%. And I think regardless of the country, granted, some countries provide more cushy environments, but regardless of the country where you live in the world, I think having yourself as that compass, understanding where you at and how you operate, and assessing what do you want to achieve. And now we live in a beautiful time where you can actually find people to provide you with the resources and help. And I think with either you individually trying to figure out your financial situation or a founder, I think it is extremely important to ask for help and to find people that are similar-minded people that can be your accountability buddies. That can be somebody that you go and have a discussion about, and hey, I'm trying to accomplish XYZ. How did you do that when you were trying to do that? So I think having more conversations, and I wanted to finish with this. I love TikTok because I think a lot of useful information is there. So now there's a big trend called loud budgeting, and loud budgeting is really paying yourself first. We are laughing about it, but before, the trend was primarily linked to consuming a lot, that aesthetic lifestyle of a designer bag, makeup, whatever. Yeah. Now we're talking more about paying yourself first, whether it's paying off your debt, saving for your future, or investing in your future, right? Really understanding how you roll. If you're an impulse shopper, or you are very frugal to the point you can't even enjoy your life, whatever situation is. And the third one is talking out loud about it, being more verbal about those things with your friends, with your communities, trying to say, this is what I'm trying to accomplish finding those accountability buddies, but you never know, you might inspire somebody when you say, this month I'm trying to save as much as I can because I have the debt, or this month I'm trying to save as much as I can by doing XYZ because I want to invest in my retirement fund, or because I have an important purchase coming in 5 years and I really need to start the discipline. You not only share that to actually step in and do it, but you're also creating that environment and the community that might be inspired by that might help you achieve that and will lift you up in the difficult situations when you try to slip and say, oh, that sign at first did sound good after all, then your friends can say, remember that goal in 5 years you're trying to achieve? Remember that retirement that we were talking about? Remember your credit card debt that you're trying to eliminate? I think that is important.
Yeah, well, sort of like, fitness comes to mind when you give this example, like having a group of people that are going to hold you accountable. Feel like eating the right thing or training the right thing. I think having community around you that, support what's best for you and don't reinforce maybe the behaviors that are more harmful and detrimental. That's always a great idea. But Eleanor, I always love our conversation. I'm excited to share this with the broader Love Out Loud community. I know you're coming and speaking with our accelerators soon as well. They're very excited for that. In the meantime, where can these guys follow you on the public domain? TikTok, obviously.
Instagram. I'm on Instagram as finance.com. I am on TikTok as also finance period. My name is Elena Hawk. You can find me on LinkedIn. On LinkedIn, I do have slightly different content, more so focused on founders and entrepreneurs and the financial system around there. So I post different programs. I participate in different tips or just observations. And my social media, like my Instagram and my TikTok, is where I post more of like a broader educational videos on how to invest, how to save, how to manage your money, basically. So definitely give me a shout out and follow. And I'm so excited about the upcoming session within your accelerator. I think it's going to be great, and I'm very excited about that.
Yeah, so wait. And for you guys who are interested in the course about the psychology of money, and you're not already a member of our hub, go to hub.loveoutloud.io. We're going to have all these links in Elena's socials in the comments for you to click through. You can go and create an account on the hub. You create the account for free, and then you'll find the course just under program. So we're excited to share that with you as well, because it's something just gone live. So,
and totally unbiased. This is a great course to educate yourself, to understand yourself, and to start shifting that mindset in order to invest in your future, whether as a company or individually, and start making those choices, informed decisions on how to better your life. I think you guys are going to love it.
Thank you.
Totally unbiased.
Of course.
Yeah.
Always.
Thank you so much for having me here, Nick. I appreciate you.
Of course, anytime.